Good afternoon and welcome to BizTech's Asian Midday Market Watch. Our guest today is Halley, Senior Market Analyst, Asia Pacific at OANDA. Jeff, as always, great to have you on the show.
Always a pleasure, mate. Thank you for having me.
Now, let's start with going through what Bitcoin and Ethereum cost now. Bitcoin is at 32,745. It's down 0.38%. Ethereum is at 2,424.82, down 3.12%. Now, let's take a look at how regional markets are performing. The SGX is at 3,158.41, down 0.28%. Bursa Malaysia is at 1,584.91. It's down 0.19%. The Nikkei is at 28,868. It's down 0.33%. The Shanghai Composite is up 0.4% at 3,594.53. The Hang Seng is at 28,762.26, down 0.07%. The ASX 200 is down 0.23% at 7,275.9. And rounding off the relatively negative numbers is the Kospi, which is at 3,228.72, down 0.59%. Mostly the numbers are in the red, Jeff. What's the reason for this?
I think the main reason here, Brian, is that we're seeing investors taking some risk exposure off the table. It's sort of a process that we saw yesterday ahead of this US inflation data point tomorrow night, which is going to be the highlight of the week. China markets have rallied today after the government suggested that they would try to cap coal prices. And also the inflation number that came out this morning wasn't quite as high as expected, leading markets to believe that there's no imminent tightening from the PBOC. That's lifted local equities. But as you can see, across the rest of Asia, basically, markets are edging lower. And I really do believe that's just investors reducing exposure ahead of this inflation number out of the US. It comes back to this conundrum: is inflation transitory or is it sticky? And the market doesn't know which, and so they're erring to the side of caution at the moment.
And let's look at, because there are a lot of numbers that came out this morning. One of the numbers was the PPI number, or Producer Price Index, for May in China. Now that jumped 9% from a year ago. Obviously it was from a lower base, but above expectations of 8.5%. But what's significant about this is, of course, this number is the fastest it's risen since September 2008. So that's something to think about. The China's Consumer Price Index, or CPI number, also came out for May. It rose 1.3%, which was below expectations of 1.6%. The third number that's come out also yesterday was basically the World Bank growth numbers. The World Bank now forecast that the global economy is expected to grow 5.6% in 2021. Now, as Asian investors, what should we be reading into all of these numbers?
Again, I think it's an inconclusive number. Yes, inflation is creeping higher in China as it is everywhere around the world, seemingly at the moment, but it doesn't seem to be out of control. I think for me, the PPI number, if we break that down, is so factory gate prices, inputs are increasing at a very fast rate. Yep. Can Chinese exporters or producers pass those price increases on to consumers in both China and around the world, leading, of course, to more inflation? The jury's out on that, because in times past, that's not been the case. They found efficiencies or basically sucked up the higher costs, and prices haven't really risen. Is it going to be different this time? And it comes back to this whole inflation conundrum. Is it transitory inflation? So once the pandemic is fully under control and these supply chain bottlenecks disappear, will we return to the mean, or is this the start of a new inflationary trend for the first time in 20 years? Very different outcomes for markets under both of those scenarios. But the honest answer is we just don't know yet. And I think that reflects the cautious nature of the markets we see across most markets this week. They've been range trading, really quite directionless, albeit, equities are still at near record highs. So I think the World Bank, what we can take out of that is the world's recovery remains on course, and that will be positive for Asia once it gets past this COVID-19 hiccup at the moment. So as a cyclical recovery play, I still think Asian markets and ASEAN markets in particular are very appealing.
And since ASEAN markets are appealing on the recovery story, how do you think they will perform versus the euro, the Aussie dollar, and the US dollar?
The currencies themselves, well, when we look at the major currencies, so let's look at the Aussie and the euro first, and you look at the Canadian dollar, the Kiwi dollar, even the Japanese yen, sterling, they all have very, very bullish formations on their medium-term charts. That implies that the dollar, the US dollar, is going to weaken. That cycles back to me to, have we really got inflation? Because when you look at US bond yields overnight, they hit 1 month lows. That's not an inflationary scenario. So they're all pointing towards a weaker US dollar over the next few months. In that scenario, they should appreciate against Asian currencies, because a lot of Asian currencies do run some sort of dirty peg versus the dollar. Against the US, it's a bit less clear. The People's Bank of China has signaled, I think, to my mind anyway, that they're done with the yuan appreciation and they don't want the yuan to appreciate excessively from here. That's basically going to put a floor under the dollar versus Asian currency. So I'm not expecting Asian currencies to appreciate dramatically against the US dollar from here, but they will all, in my view, depreciate against the other major currencies.
Now, oil prices have been a big contributing factor to this inflation story. They're above the $70 mark. With this surge in oil prices, wouldn't it be a case where shale producers will start to come into the market and then act as a new source of supply and therefore depress prices?
Well, the production is coming back in the US, but it's been a lot more cautious. And I think part of that reason, that's twofold. A, it's the financing side. So the banks are a bit more nervous now after watching the histrionics of the last 18 months and US shale. You can remember that oil prices hit negative rates at one stage last year. That's one side of it. Then it comes to this environmental ESG thing. It's just a sector that a lot of companies just don't want to be involved with, least of all the banks. So there's a huge pushback against fossil fuels, not just in the US, but around the world at the moment. And I think that is also a limiting factor as far as US shale goes. Look, I think US shale will make most of its way back, but whether it then pushes on to go on to more production highs, I think is very doubtful. I think it's not going to be the factor that it was before the pandemic for now.
Now, Jeff, thanks again for your time.
Always a pleasure.
Now, we've been speaking to Jeffrey Halley, Senior Market Analyst, Asia Pacific at OANDA on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Please check out our Facebook and LinkedIn pages, as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thanks a lot for tuning in.